So guys, thank you for coming. Like I said, it's just for our premium members, session among us. You guys can all talk. You're more than welcome to share your screen and, how the whatever tricks or things you learned that you use in the right and in your trading style. And so you're more than welcome to do that. First, I just have the chart open here. SPX and VIX. Today I really want to do a lot of scalping. So first, I'm just going to go over something that I was doing today. I was seeing, right? I'll try to cover something. And here, so this is the SPX chart on my left side that I have, right? Today they were doing something over and over again, and then I got VIX on the right. All right, so VIX daily started from here. I'll just have the today's chart open only. Right here, it started from roughly around here. So when I was wanting to scalp today, right, I really wanted to do some scalps, but as I was seeing, in the morning we had a little rip on SPY, then it came down a little bit to these levels. It was holding, but they were kind of playing games with us all day, right? So on SPX, if I draw this here, they broke the high of the day here on the left, right? You guys see this? They poked right above the high of the day, which probably sucked in a lot of people. And on the other side, the opposite, right at 11:05. 11:05, we had the VIX that was, that broke the low of the day. So some people probably went long there, right? But this we covered a few days ago. I went over, I shared my thing that sometimes they will poke above or below to fake you out. And there are a lot of newbies or traders with not enough experience who probably went full bull mode here. If the trade was to work in their favor, great. But if it did not, right, they got sucked in. And those are the same people that probably stopped out. They were frustrated. It messed up with them emotionally. It probably sucked them in. Then they were probably trying to make up the covers, revenge. They probably got stopped out here. They probably tried buying here again, and they were just giving away their gains, right? So on VIX, they did the same thing. So sometimes it's better to see the levels held before buying in, right? Hold matters a lot. And then after that, what did they do? Then later on in the day, SPX, it broke the intraday low, not the low of the day, but the intraday's lows here. It broke below here. And then VIX caused panic. It poked right above the high of the day, right? Which signals that, okay, the market is going to go down or something's going to happen. And what happened all of a sudden? They reversed the market. They faked people out again. They reversed the market up right away. That was the first signal that I got. You know what? Today's not the day to do it. We caught Tesla in the morning. I stayed on the sidelines until the end of the day. And they did this all day, right? And Yash, if you're in here, you can also share your scalping that you were doing. So Yash figured out his play. He's been scalping a lot lately. Last few months, he's picked up a strategy. He scalped this range all day, basically. And where did he get this range from? It's pretty evident. He got this range from right here on the left, right? That range was built in the morning. That this is not going to be easy. With Biden coming on at 3:30. The rip might not be easy in the market. So he kept playing SPY up and down at resistances. He would sell, he would buy these small dips, and he would sell them at the resistance and with very tight stop losses. And then throughout the day, they tried doing this, a few times. They tried breaking above the S&P above, but they were not able to hold above it. They tried poking above it, but there was no confirmation. Then at the end of the day, Biden came on at 3:30. As soon as he mentioned Russia or Ukraine, algos kicked in and they caused a dip. But here, same thing. People probably got panicked. They probably sold their positions here, and then all of a sudden, the rip happened, right? This is where we entered Tesla puts here. I think most of us around these levels, we were in profits, but then we didn't sell, and then we stopped out. But even stop out is a huge win because we don't know what's going to happen, right? But today they kept doing. So this is something that you want to learn. This will happen a lot in trading. They will poke S&P above the high of the day, but do they hold? That's the question. Now, if they hold, we continue higher. So if I go back in one of these time frames, let's just see what do I mean by hold. If I can find something here that I can show on a rip or a dip, right? Here's a perfect one right here. So this right here, if you guys focus on the left, when we broke the low of the day here on the first one, it did not hold. They brought SPY back up. So they brought SPY right back up here, SPX I'm on, right? It kind of failing. Then here, they broke the low again. But do I jump in here after 4 red candles? I still want to wait, right? They brought it back up. And then here is where you want to take the break that, okay, you know what? Now the bear flag has been built. They tried breaking the support a few times. And this time is likely that's going to break down lower. All right. And then here's where you catch the move. And this move alone results in 100, 200% move on a scalp alone. All right, versus a 10 to 15 cent loss. Let's say if you buy an option at $1, this is where a $1 option goes to $2 within 15 minutes. But If this was a fail, you would probably stop it at 90 cents on 85 cents. So the ratio of profitability has to be in your favor. All right. And guys, now, I'm always talking in pre-market everywhere, but I want to give a chance to a team. I want to hear from you guys. And so can you, whoever wants to talk right now, Bukky, I believe you have some great things that you learned from your volume price analysis, and I've been reading up on it, and man, it's amazing. So please unmute yourself if you want to speak, or if you also want to share your screen, you're more than welcome. Let me know.
Sure, bro. Can you guys hear me?
Yes, I can.
Okay, perfect.
You want to share?
So I can share my screen as well.
Okay, so I will stop my share. I'll wait for your share.
Okay.
Okay, share your
I gotta figure this out. Hold on, because I never shared my screen.
That's fine. Just click on share and you'll see it.
Okay, got it. Okay, this one, yeah. Okay, can you guys see my screen?
Yes, we can. And guys, after Bukky, whoever wants to speak up, please go ahead, leave a message, build up your confidence. These things will help you in trading, right? So it's just us, our premium, our MSL family here, right? So let's discuss things. Bukky, it's all you, brother. I'm gonna put myself on here.
Perfect. So basically, with the volume price analysis, right? The first thing, I've learned is, if the price is going up, it requires volume. If the price is going down, it requires volume. So it's a simple formula. I mean, there's nothing I would say like complicated about it. Like anything, if the market wants to go higher, it needs volume. If the market wants to go lower, it needs volume. It's that simple. Let me share something on a daily to give you a better explanation on that. Okay. I mean, if you see this chart, let's say SPY, right? I mean, last time we actually bounced from the bottom, and it actually went for 1, 2, 3, 4, 5 days, right? If you see the market was going up, but look at the volume over here. I'm going to have this as an average, as like this line is an average indicator for the past 50 days. So the volume was very less. One of the reasons was it was holidays, but still, it doesn't make any sense, like especially for like this kind of candle, like a full bullish sentiment, but there's no volume to justify that. That's why it actually, chopped around for a few days, and that's where I knew like market has to either come down. In case like, let's say, if we need, let's say more melt up, we would have actually a good volume in there. For example, like this one over here, the way I looked at it, right, when it was coming down, this is something called stopping volume. Like all of a sudden, like you have normal range of volumes, but when you see like one big pop, huge in volume, that shows that the buyers are stepped in, the sellers get exhausted. So that's where I was thinking of like more of a chop, but they try to pick up the market. And same scenario over here, if you look at it, right? I mean, they pushed 1, 2, 3, 4 days, and look at the volume dropping, and the 5th day was red. So that's a basic principle. If the market needs to go up, it needs volume. If the market needs to go down, it needs volume as well. And if you see like a big red candle, and you must look at it, you must question it, what could be a reason, or why is it behaving like this? It's that simple. That's the first thing I look in terms of volume, right? Now, as per the trades, someone questioned me in Discord, actually. I mean, a guy asked me about going over the Apple trades I have, right? So as per the Apple trade, he asked me like why I was so patient, what was behind it. The first thing, it's, I've learned from Ricky, those are something called devils, right? I mean, we should know, where our supports and resistance and everything is, and look at the chart, how the chart is behaving. The first thing I look, in the morning, the very first thing I check out weekly chart, First, by looking at it, I see over here, this was showing something called a reversal over here. That's how I interpret the chart, right? So coming this week, I knew like I had this an idea, that the market has to go down. Why? Because it was putting a reversal, right? So that's the first thing. Now, after checking the weekly, let's say this week, I was expecting the market to go down. Why? Because it was putting reversal signs, right? So then I check normally daily how the market is behaving, where are the daily prices at, and what's the volume look like on those, right? This is, I would still call it as an average on daily. I mean, it's not that low compared. If you see like these days, it's still an average. I would consider it, but this thing, I mean, it's still questionable. Why? Because yesterday, look at the volume, and even today, it pushed up, but on a lesser volume. So there was no volume. So basically, they're pushing prices up without actually, having the real volume. And then after daily, I check normally the hourly charts just to see how the market, how the stock is actually behaving. So the way I look at it, I mean, I don't, particularly focus on anything else except the price action, how the market behaves, how the particular stock behaves. I mean, my reason for that trade, I mean, this one is a 200 moving average, right? I mean, this is my main indicator. I mean, if I look at it, right, I mean, that's how I actually pick my trades, right? So this is the 200 moving average. And one thing I've learned at my stock life, right, most of the, let's say, hedge fund managers, right, they take 200 MA on daily, and their algos kick in. Let's say if the price is above the 200, they start buying. If the price is below the 200, they start selling. It's that simple. All you have to do is you have to understand how the price behaves around. And for me, the way I look at it, it works as a magnet. If the price is below, right, it will try to reach for the 200. Prices above, it will again try to go to 200 moving average. That's how the price moves on stock. To give you an example, right? This one was a recent one, the one I picked up in Apple. I'll give you an example. Okay, so at the beginning of the bearish run, right? I mean, if you see, Apple was almost all-time high. Can you guys see it, Ricky?
Yes,
Yeah, we can see it.
Doing great.
Got it.
Yeah, Bukky.
Got it. So basically, let's say an hourly, right? The way I look at it, the way I've understood my trades, and I'm still, trying to get better on those, right? So basically, if you look at this, right? I mean, Apple was flying all-time high, right? And all the moving, like these moving averages, 8 and 21. I mean, they're very good on a daily, but on hourly, they're not that great. On 5 minutes, they're still okay for scalping. I mean, sometimes they work really good, but most of the times I don't pay attention to them. On a daily, yes, of course. But on hourly, they follow the price. Simple as that. I mean, this cross, if you look at it, I mean, it became after the price went down. Had it been like, up, you were not going to see this cross. They were going to follow it simply. So basically, at the all-time high, Apple, when it started breaking down, right? I mean, if anybody, try to buy puts just because it's high, it's a bad idea for me to think about, right? So first thing, give me a signal is the 51, this turquoise line. I mean, how the price behaves. I mean, as soon as it closes below the 50, that means it will try to go for the 200. That's what I look at, right? And when it crossed through the 200, and earlier I mentioned it works as a magnet. And if you see Apple, the first time it broke down a bit hard, and then it went back again to retest it. And that was the actual entry. And believe me, I figured this out like a month ago, not before than that, just by reading the 5-minute charts and 10-minute charts and 50 minutes. And then I started applying this thing on hourly, how it behaves. And if you see, once it broke and retested over here, I'll show you the dump after this. Look at the dump. All the way down here. Right? And that was on 12th of January. And within 2 weeks, the price, it gave the move from 176 to 156. And then when it, and you have, of course, then you have levels, right? The previous resistances and supports and all. And then again, this time when it turned bullish, it went through. First time it couldn't go through. Second time it went through, and this time, it was retested yet. And that's where I look at it. I mean, how is the retest? If it's a bounce or if it's just a breakthrough. I mean, if it's a bounce, I was gonna take some calls, right? I wait and watch like how the price acts around it, and if it breaks it down, I try to take puts. It's that simple. So when I mean, mostly you guys, see me as a bear. To be honest, I'm not that like bear or anything. It's just I just look at it. I mean, the way the price moves around it. I mean, if I see the Apple, let's say, closing above it, right? I will be, definitely the most bullish guy. Let's put it this way. But till then, of course, I'll be there. That's the first thing I look at. And if you see, I mean, all those supports and resistance, look at the price, how it was trying to bounce. I'll give you an example on JPM. You know how I was checking the banks were strong or weak. This is the daily chart, right? I mean, we check the weekly showing reversal, right? I mean, this is a bear flag on weekly. After this candle is supposed to go down, but if it doesn't go down and less volume, you probably see another candle week over here before going up here and then breaking it down proper 200. I mean, the simple way, this is the 50 on daily, right? And we closed below it. Now we're just retesting it. Next level, this is the 200. It's a magnet. At certain point this in coming months, I have this, let's say, that's what I think, it's gonna touch 123, or probably by the time, it will move around here, 128 area, right?
Bukky,
Because
sorry, can I ask you a question?
Sure.
Yeah, are you using the simple moving average when you're looking at the daily? Or
Well, okay, I'll explain. This one, the red one is EMA 8. This one is EMA 21. This one is simple moving average 50, and this one is simple moving average 200. And if you see, I don't have any other indicators at all, like 1, 2, 3, 4, and fifth one I have just volume. This one RSI. I mean, if you see, I don't go with the overbought or oversold. I've tried that one. I mean, for some people it works beautiful, but one time I took trade on C Limited, and that was way oversold for 4 or 5 days. And then I took the calls. It didn't work out. So then I started questioning, like, what was the reason? What went wrong, right? So now this indicator RSI, it's just basically I have something like, if let's say, I'll expand this one. Okay, so this area between 55 and 45, it's a no call or no put zone. Let's put it this way. So this is the area where buyers and sellers are fighting, right? And this line is the RSI line, right? So this is where buyers and sellers are fighting. So it's indecisive in middle. So if it's up, for me, the way that I look at it, the buyers are strong in the market. And if it's down, the sellers are strong. That's how I see it.
So just one addition, like I really love your strategy of using the various moving averages, EMAs, etc. But like one thing I have been using a lot in the last 2 weeks, every single time I've been scalping Tesla SPY, I use this new indicator like anchored VWAP. Basically what it is it's just the same thing as VWAP.
This one for you on 5 minutes.
It's the VWAP. That's not the anchored one.
I normally use this one with its 2 standard deviations, right?
Yeah.
But again, let me have a look. Is it in there?
Yep. It's in the indicators, but I think you might need premium for it. If you have premium, then it should show. It's AWAP, something like that.
I have everything.
Perfect. Yeah. And then you just need to like choose a candle from which you want it. So basically the way anchored VWAP works is like, let's say you are in a range and you have scalped a single stock a lot of times. And once we break out from that range, that's when I put the anchored VWAP in on the breakout candle. And then from there, what it basically shows you is how the VWAP is basically acting is the exact same calculation, but from that specific candle. Instead of like, so the way every single like indicator works, like the moving averages, they take it from the day's start till the day's end. But the way anchored VWAP works is you can choose where you want it to start at whatever candle you want it to start in the day. So on the 5-minute chart, what I've been seeing is like a lot of stocks, if they're below the anchored VWAP, they almost 99% of the times reject hard of it if like you have it on the correct candle, and you'll get like almost a 5% scalp. And
Got it.
then when you're above it, like it just keeps riding it the whole day. So that's like one thing I'll say, like being a scalper, that's like a really good indicator to use.
Sure. I mean, if you share me a screenshot, like how does it look like? I mean, I've added this one. I need to add the values in there. I guess
Yeah,
I have to read about it a little bit. I'll see online like how it works, and I'll
definitely.
add.
And like
I'll
once you master it, bro, like it will take you like just 10 minutes to understand the basics of it. But once it's through, you will forget using all the moving averages. Like
absolutely.
literally, completely, like I just use three indicators: 8 EMA,
Mhm.
RSI, MACD. That's the only thing I use. And
Makes
then
sense.
after I saw anchored VWAP, I literally stopped looking at all three and I only use anchored VWAP now.
Makes sense. Makes sense. I mean,
Yeah.
I've tried like so many strategies on you know like before. I mean, for
Mm-hmm.
something like for the morning, right? I mean, like let's say if it's morning, I use this one, Bollinger Bands, right?
Yeah.
I mean, they work really good, but now I started watching the price action. I stop using it. Sometimes once in a while, let's say if I'm confused, I just go through different, styles basically.
Mm-hmm.
Like this one is for the scalping and pivot points and stuff. Like I've seen it, how it works, but normally I use simple straight away like this.
Yeah.
And a
Makes
VWAP
sense.
sometimes just to check the VWAP how the price is acting. But
Mm-hmm.
definitely, I mean, if once you get a chance, you can just share me a screenshot. I'll add the
100%.
values in there, and I'll see
Yeah.
like how that anchored VWAP works.
Definitely. I'll send a link in the premium Discord so everyone
Sure,
can use it.
sure. Thank you. So as per the JP Morgan, right? I was talking about the banks, right? So normally, if I'm in a trade, I just put a trade and watch the hourly and half an hour charts, right? I'm in JP Morgan and BAC. The way I have these tabs set up, first is SPY, QQQ, IWM, XLF, VIX, and TNX. These are the five indices. Then the chip stocks, then the tech stocks, and then the in between, let's say BA and vaccines and all that. And most of the time, my banks are always on the right side, so I don't get confused, right? Banks, AXB, Mastercard, and in the end, I have is BTC just as a reference, right? So as per the banks, right? I mean, the way I look at it, I mean, if you see today, I was watching these banks, right? I mean, yesterday it tried to went down, but since it works as a magnet, the buyers were trying to fight this one, not it to break down, right? Today, I mean, I had these levels drawn, right, in the daytime, and when the banks, faked out or SPY faked out, this candle was closing below it, and I was getting confident that we're gonna get the move. But right in the let's say 5-10 minutes, the last 15 minutes, this got picked up. And when this got picked up over here with these 2-3 candles, I mean, it changed the scenario for tomorrow. Had it been closed below this, of course, I was gonna say like, oh, it can dump crazy tomorrow. But now it's trying to bounce back from this one. So there's two possibilities. On the above line, we have the 50 MA where it's getting rejected, and the below is 200. So it's getting very tight. If you see, I mean, it's almost a descending triangle. That's what we normally look at, right? So now, I mean, two scenarios can happen as per my understanding. One, we can see a big candle over here tomorrow, and if we see a red candle next to it, then it's dumping for sure. If there's no red candle, if there's a continuation of the green candle over here, then I'll try to get out of from that puts. I'll wait for a re-entry or probably re-enter around this area for a double top. And if we take this one, then it's bullish. Then the whole market will be bullish by then. Then I would say, I mean, cut out your call puts and everything, just go with the calls. That's the way I look at. I mean, if you see, even on that, and again, the way I look at like how the market is behaving, right? I mean, how the banks are behaving in comparison. If you see, this one, for example, right? BAC, that's a Bank of America. I mean, it went, it crossed 200 with a good volume over here, right? That this is justifying the volume, right? Second time retest, and it was that strong. The sellers were weak that it didn't even properly retest and just flew right away. look at the move after this. Proper move. And when it actually showed reversal signals, it tried to came back down 200. Of course, this is the first time. First time from top to 200 of it is supposed to bounce. And that's the way price action works. But it went through, but there was no volume. So that's why it picked up right away. And then the buyers are fighting. And today again, it pushed on the news, right? The buyers are fighting. So now it's more likely like who's gonna win, buyers or sellers. Whomever side wins, we're gonna follow that side. And if you compare this one with the JPM, this is 200, right? If you see JPM hourly, look at hourly. BAC came around here and JPM is still holding strong over here. So basically that's the way I look at it. And JPM bank is stronger than in comparison to Bank of America. That's the way I check it. Same with my Amazon puts, right? I was talking about Amazon puts. I'm gonna pull it up. So this one, if you look at it, it went through 200 MA with the volume. Of course, it was earnings and it went crazy. Of course, I have these levels up there, but if you just look at it, I mean, this was the first retest. And yesterday, I was sure the market is gonna pop. Why? Because this one, it was coming to retest that 200. And then as soon as it retested, it popped. But again, above there is a strong resistance. Now, fight between Amazon as well. Who's gonna win? If we broke below, this is my alert set over here. This was yesterday's intraday low. So this is my alert set over here. The price literally went there and just went up. Had it been crossed, I was gonna try to take a scalp till here. And then if we take 31.73 or 75 or 72 or 70, like $5-10 on Amazon, doesn't matter, right? But if we take this level, then we can get into some calls, possible. But if we break this one, I mean, if this bounce is not that strong enough, Amazon is going for a hell of a ride. And this time, I don't think it's gonna stop around this level, given the market conditions. So basically, buyers and sellers, they are actually trying very hard, to stop the market. I'll give you an example of another trade. I didn't trade that one because of the spread was weak. But if you look at it, let me show you something. Same with the Tilray as well. Look at this. This thing works as a magnet. Every time it breaks down, it goes down. If retest, goes up. I'll show something that I was actually doing something with this one on hourly. Look at this, PanW. As soon as it went down, retested, tried to go up, but it was not that strong. So that's why it's holding down there. If we break again 520 level, I'll probably take some puts, and those will 505 will be your first target, and then below you can put it as a support. It's up to you how you play it. This one was a beautiful retest. So every time it tries to go on the moving average, it gets rejected. That's the way I look at most of the charts. And I figured out this, like, let's say, I would say a month ago, just by checking the 5-minute, just by sitting and watching the 5-minute price action. And then I'm trying to implement this thing on 1 hour and 4 hour. I'm not that good with trades, to be honest. Reason why? Because I'm still learning. Once I'll be good, you guys will automatically. But so right now, I'm trying to implement these things, how they work. And sorry. I'm sorry, Ricky, go ahead.
I think somebody had a question for you, but I love what you're explaining. This is amazing. I mean, this is refreshing my mind because I used to know this is very good. I hope you guys are finding this helpful. Zoom user, I think, has a question. Keep your chart on, Bukky. Just keep sharing it. Don't stop yet. Zoom user, go ahead.
Hey, it's RD here. How's it going, guys?
RD, how's it going, brother?
Not too bad, not too bad. Sorry for if you guys can hear my dogs barking. I'm sorry for that. I've guessed over it. It's just crazy right now. Yep. Okay, my question is, so I've always had this problem for a long time. It's always affected me. When it comes to long-term calls and stock price. So the one I want to use for the example is LV's CRM March 18 call. Can you pull it up for the premiums as well? Because that's always bugging me with long-term like calls when it comes to the stock price.
Like how they're bugging you for the calls? I
Okay,
don't
so like
understand.
you know the inverse head and shoulders that LB wanted to have before the CPI numbers came out and just destroyed everything that day, I think on Thursday.
Okay.
And then it looked like it was working according to his plan. Like it hit 225 after hours. Everything looked good. And then the CPI numbers came out and just destroyed it. But when I look at like the year by year for the options, I'm just confused when it came to the same price, like I understand that with time decay and everything, like I'm getting better at that. But I still don't understand that even after like a day or two with the premium being destroyed so much, even though the price movement is like pretty much the same level as it was before.
Okay, so two things I've noticed in terms of option price, right? I mean, if you try to buy options, let's say first thing in the morning between 9:30 to 9:45 and around 3:45 to 4 o'clock in the evening, right? You'll always find those prices crazy.
Right, premiums, Jack. Over the time I've been with you guys, I've realized that too, the timestamps and all that. But what that still just bothers me, and I don't understand, is when like I'll go more specific. So when CRM's price was between the range of 207 to 209, last time, that's when everyone got into the 160 March 18 calls. But when we came back down the same level, it was like between 110 and 90, like $90 to 110 per contract.
It's still close by, right? On 116 and $1 the spread, or even if 90 cents. I don't normally pay attention to that much option with the theta and all. The reason being, the way I look at it, the way I've noticed it, right?
Okay.
If you see a lot more people are bullish, they will try to buy the option, right?
For sure. So, yeah, it makes sense.
Right?
Yeah.
So more bids, that also jack up the premiums. That's the first thing. And if they're bearish, of course, the call premiums will be less. And I'm sorry.
Right. Okay. Yeah.
See, on options, I'm just gonna Bukky just jump in. For options, so you bought CRM at the same price. Obviously, time decay kicks in. This happens, but when VIX is high, when there's more volatility expected, unless both calls and puts actually will be more. Yeah, keep that chart open, Bukky. When VIX was up there, puts will be very expensive. That's number one. All right, because when you guys see a stock makes a move up, puts lose value really fast sometimes. That's because the VIX is coming down, and then not only the delta comes out of puts or decreases, but the gamma increases along with it, and then IB also decreases, which takes away the option premium. Now, on the call side also, if VIX comes down and the stock is rallying, the call pricing will go up, okay, as long as the stock price is going up. But let's say a CRM right now is trading at 213, for example, and you buy 220 calls 1 week out. Now, first of all, every weekly theta is going to kick in per day basis. And tomorrow, if CRM comes down to 211 and comes back to 214 at the same price, that option is going to be down a little bit, all right? Because we'll be expecting a VIX to be either flat or down. And if the market is rallying, VIX is coming down, CRM stays sideways, that CRM call is going to lose value. If the market is going up and even though CRM is not moving, but that option is going to lose more value because given the sentiment in the market, right? The IV is going to decrease. Okay. Sometimes some stock call prices lose a lot of value so fast, and one looks like what happened here, right? Is because the market is strong, market is going up, but your specific stock is still, the IV is going down, right? The VIX is coming down, and that makes your option price go even lower. So not only theta kicks in, but other factors kick in.
Okay.
And just to build up on like what Ricky said, so one might think like psychologically that if VIX is up, I bought the put, but now VIX came down, my put has lost its value. If VIX again goes up, it's not that your put is again going to increase in value. Your put is still going to be that same 20% lower than what it was when you bought it. And like buying anything when the VIX is like near high of the day is just like super, super risky. And that's why like me, Ricky, LB, we always try to avoid it. But like if you're scalping, like let's say today, like we saw stocks were completely range bound. And even if VIX is making whatever movement it is, when a stock is range bound, that's when like that VIX added premium is pretty negligible. Because then like there is premium in the market, but that is distributed amongst all stocks. It's not focused on something specifically. So then what comes in is the strike you choose, you'll have to see if how much the IV is on that specific option. There will be some options of Tesla which will have IV of let's say 70-80%. Those will get hit very badly when VIX goes down. But the options which have IV of like let's say 33% or 25%, 30%, for example, those ones like they won't have any impact or like close to negligible impact when it comes to VIX movement. So that's one thing you'll have to look when you're scalping. And when you're swinging, you 100% have to see what VIX is at. Because if VIX is at, let's say, $30, and at the same time, you know that the stock is going to come up or go down, like go up or come down, regardless of even if the movement is in your favor, unless it happens in under 5 minutes, you're never going to get paid on that option. You're always going to lose money. So the strategy I have been like using nowadays is I've not like implemented it yet, but I've just been kept noticing, done paper trades on it on Robinhood, is every morning if the VIX is super high, I try to get a credit spread on Tesla of like strike super close. Regardless of if Tesla goes in that range or not, I still have like made money on my last 3 paper trades for the fact that the second VIX comes down, the premiums which have been added for the morning completely die off, and like that same contract then goes for like 50% discount than where it opened. So like that's one thing you can like try to do when VIX is super high.
Okay. And now my other question is with premium. Okay, it's going back to the same because I was watching this LB's CRM contract very closely, and I just wanted to. I'm not in it right now, but I was just watching it. When it comes to premium, so CRM today was up $4 in the morning, went to like a range from 208, 209. But when it opened barely green and it was red. But then towards the afternoon, when things were starting pushing, it only went up $1 into something else, and premiums just skyrocketed. So,
Yep.
and
The
but
only
VIX was
explanation-
under that when I was still looking at VIX too, Yash, and VIX was still the 25 to the 26 range. Like it wasn't like at 30 in the morning. So I'm just confused. How do we know when we're swinging like calls and like that? When does like the premium start to add up like that? Because I've always like cut off like the swings because I'm like, oh well, premiums are not adding. I feel like this is gonna be a lost trade. And then towards the afternoon or the next day, premiums did get added, and I just lose hope.
Okay, and
I think Ricky can like answer that question better than.
Remind me this in the daytime. I do want to go over this live. Like I'll share my trading platform screen. We'll look at some premium. Like today morning, my Tesla order I put in for $10 for a reason, and it was to a T. Now on CRM, one thing you guys have to understand. Sometimes, let's say a stock that is part of let's say XLF. Let's say Bank of America is part of XLF or financial the ETF. All right. Now, if Bank of America is going up, the XLF is sideways or maybe going down while BAC is going up, right? Not all stocks in ETF follow ETF. Sometimes they're on their own. And let's say if Bank of America is going up, XLF is going down, that premium that's going to be added to Bank of America on the call side will not be as much. Like it will be added, delta will be added, like it'll go up slowly according to like the T. If XLF is going down, they're not going to add too much premium because they know that the Bank of America can also follow the entire market sentiment. But let's say XLF is ripping, all right? XLF is ripping up and BAC is going along with it. That adds more premium to your calls. Why? Because there's market sentiment now, the market strength. So it's not just Bank of America. Bank of America got its ETF running, the entire team running, right? So more premium is now added because the ETF is also running. The market-wide sentiment is running. Right. Notice this when you guys trade. And if XLF is just holding sideways, is going up a little, then accordingly premium will be added. And so that's one thing you guys need to know. Sometimes premiums jump super high when the market breaks out along with the stock. Like Tesla will be the perfect example if you guys want to follow. Let's say one day Tesla's trading on its own is going up. Watch the premium that will be added into the calls. And then one day, watch when Tesla is running up, and along with Tesla, S&P and Qs are ripping to the upside, then watch the Tesla premium that will be added. It will be much faster. Right? So that's something that will help.
That's actually very informative, Ricky. I mean, very smart thing to look at.
Okay, yeah, that's how
But
you are.
I'm just giving it out to you guys.
Could I ask you a question if you're done, Ricky?
G Money, who's this?
It's Dreon. Drini.
Okay, G Money is next, and then you.
Oh, okay.
Let's just keep the order so everyone gets their chance. So I will ask you a question for G Money. I'll go ahead. You're next.
Oh, great. Can you guys hear me?
Yeah.
Sure.
Oh, wonderful. Great. Love this stuff. Thank you so much. I'm learning a ton. Thank you. So this is a question I have about scalping. What are you watching specifically to enter? Because I noticed, I think it was Ricky called out a scalp later in the day, IWM, when it was going to get above 205 or 206.1 to 206.5, and you're like, I'm going to enter at 92 cents or something to that effect. And I think the contract was like at $1.10, $1.20, and so I guess how did you determine that price level, number one, and why? And I think I looked back on TradingView as to how you pick that level. There was some wicks up on the previous days that touched that level, if that was your entry point.
Okay, so I'll just verbally explain that to you. So on IWM, I sent that chart and you guys can see, right? Those levels are very tight because if you just put a 15-minute chart, or if you go over the 1-hour chart, actually, so I basically take the hourly chart. I look at the long wick, I look at the opening wick, I look at the closing wick, and I look at the low of that wick. And that's where I draw my levels, because those are the support resistance points. And when I was looking at IWM, it was holding a certain level. So if you look, Bukky has the 5-minute IWM open. Bukky, keep it open. And if you look at it around, let's say around between 1:30 until 3 o'clock, IWM did not move. I wanted to take out 206. I wanted to go towards 206.70 was the level, if I'm not wrong. Because this is like indices are really volatile. Even when they rip, sometimes they give you a nice little entry on the dot. And this little red candle that we had at 12:40ish, I think, the big candle where it touched the 50 MA. Yeah, that one. That level, it bounced right off the level which I sent. But that level is a level that you can see right onto the left. You see how many times it got support there? I mean, it could have broken through right through it, obviously, right? I would not enter just right away. But those levels, I draw them to a T. So my entry on that puts, your question was, why was I eyeing 90, 95 cents? Because if IWM was to go up towards my level at 206.70-ish, I think that was a level, if I'm not wrong. I might be off by a few cents. Those puts would be worth 90, 92 cents. So I have them calculated beforehand. And in order to understand how they're calculated, you must understand the Greeks and see how those options move, right? So that is just like the Tesla today, I calculated beforehand. This is my level. That I'm going to enter in $10. As soon as Tesla hit 91 or 921, they filled me for 10, and then I sold it at 916, 917, the $5 drop, which I got, right?
So what are you using? That's helpful. Thank you. What are you using to calculate with the Greeks?
Greeks, overall Greeks, and just I've been watching these charts for many years now, so
Certainly.
Just to understand the fair value of the option that I want to buy.
Okay.
But just to help you on it, the one thing, like with Greeks, main thing I look at is delta, and the second thing is theta. So like Ricky said, today he was very sure of it coming $10 when it hits its level. You can calculate the rough math using the delta, but then that price you have is only going to come from experience.
Right. Understood.
Like once you paper trade a lot, you get a hang of how Tesla moves, how the premium moves. You'll know exactly when to buy it and when to sell it.
Wonderful. And then how do you determine the exit? Is it a percentage of your entry, or is it a specific just
dollar
amount?
Okay, so that is a very different question than this. So the way I do exits is it depends on the type of trade I'm taking. If it's a swing trade, then I try to keep my stop losses based on like percentages, as like if I'm like in 20% loss, like I usually keep it super tight, like 10% loss, because my rule is if a trade is not making you money in the first go, it's not the trade you're supposed to be in.
Right.
So that's why I keep a 10% loss on a swing trade. But on scalps, I try to keep it based on levels. So like for Tesla, if I'm like last week, let's say we were entering Tesla calls at 919 constantly, and I had my stop loss on a break and hold below 913. The levels were given by Sachs, and like once you like play Tesla a lot, you yourself will start having your own levels.
Got it.
Exactly.
Like you,
Wonderful.
yeah, and you just develop them on your own at a point.
I want to add something like in terms of levels, right? I mean, let me give you a quick example. I mean, Ricky was explaining about the IWM, right? I mean, he told us like, something around here, and he told us about the candle about like, at 12 o'clock, and this range basically he mentioned, right? 206 and 205 area. And I just like, I was listening to Ricky, I just draw 2 lines, right? I drew 2 lines over here. But when I was scrolling back, look at this. It automatically became a level.
Exactly.
Right.
Right? Look at this.
Yep.
Automatically became a level. Just by, I mean, 2 prices. I mean, the best way to like draw the levels, it's your levels. Whatever you feel comfortable.
Okay, make that chart 1 hour chart and then zoom out.
Sure.
Yeah.
Now the 1 hour chart, now zoom out. Now you see all those ranges, even above this range, there's another range at the top, you'll get your first mark, and then below.
Yes.
So you can draw the at the opening, closing, and all the VIX, your levels. And these indices, trust me, man, look, it does not go straight down. Even if you catch a 30-cent move on those 4 resistance, you're likely to make money. And if it does not go in your favor, like when it does sometimes, you just stop out. As long as the overall ratio is in your net profits in your favor, you win. And the most important thing, what does it come down to? Position sizing. If you have a 10K account, you go in with 10K and you lose 10 cents, 1,000, now you're under pressure. I mean, that was your own mistake, not anybody else's. But if you have 10K cash count, you're only scalping with $500, that's fine. You lose $50, it's okay. You lose the second one, $50, it's okay. For the third one, you're gonna nail it for maybe to a 30-cent profits, which takes you up $50 net in your account, which slowly builds up, and then your position sizing starts. Yash took a $4,000 account to $250,000 in less than 1 year. And
amazing.
now he talks about taking 10, 20K a day. So, and something about Bukky that I want to let you guys know, he's been with us more than 1 year now. I've known him for a while. He's been in our group since October, November of 2020. All right. And he's watched, and then in January, February, March, April, May, for 5 months, he just watched the markets. He did not trade, but he was a premium member. He watched, he kept learning, and then he slowly started trading his account. He took the 3K account to 17K within a month. So these are the guys that actually put a lot of work in. And Bukky, the way he's explaining, and Bukky has financial background with the banks and stuff, so he's very smart. So very informative, smart guy. So this comes in, but it's a hard work, and he's read so many trading books. And the way he's been explaining things, I'm surprised. I'm like, wow, it looks like he's been trading for 5-10 years.
Yeah, no, and I appreciate everyone when they say that they're not in anything right now, they're just waiting, there's nothing to do. Or Yash this morning basically said, if you're taking a trade within the first 15 minutes of the day, it's not a trade, it's a gamble. I mean, those things are so helpful, because I always felt in the past that I had to be in a trade, and I overtraded, and I made a lot and I gave a lot back. And so those, when during the day, some people might find that that's repetitive, that you keep saying it. I find it very valuable not to be in a trade, and you're waiting and all that is very, very helpful. And then another quick question: is there a list anywhere on the Discord of the exact indicators on TradingView that you're using? Because when you pull up like a anchored VWAP, there's like 10 of them. So if there's a way that we can,
I would say, I'm sorry to cut you off. I would say, I mean, it's up to you, to be honest.
Okay.
I mean, if you look at my screen, I have like so many. I've shared earlier. I have Bollinger Bands, right? I've tried these ones as well, right?
Oh,
this one is 50. This one is 200, right?
Yeah.
And they work very good in the morning. I mean, the way I look at it, let me explain you on a Tesla, right? I'm not that quick to get in. Let's say if you want to take a trade first minute in the morning, right? I mean, as soon as it, like the way I look at it, like have a look on this one, right? So first one, this one is RSI. As soon as it crosses, that means buyers are in control, right? The very first candle, and the volume justifies. And the very first candle took out the 50 MA right away, right? On a Bollinger Band, it started to opening up. And this one was, I have to jump in calls. My stop loss would be this middle line over here, right? You take the call, it's going to give you the right away move straight away. And of course, then your exits, you were talking about, these are the levels, like these are the old levels drawn, like, I don't know, like when did I draw them, but yeah, they have been there, right? So from here, 902 all the way to 920, within around like till 10 o'clock, you probably made like more than 100%. And look at this, the buyers, right? As soon as it came over here, this means, it's a chop. That's the way I look at it. And it is not an indicator like you'll find anywhere. I made it myself on RSI. And I try to read it with my own thing, right? And if you look over here, this is a chop. And look at this. This is a chop, basically, right? As soon as it, it went over here, this is the selling signal for one candle down, and right way it picked up, again chop. And after that, this line is in the middle. That means it's been choppy. No buyers, no sellers, right? And that's the way I look at it. But again, I don't use it very often because I'm not that quick to jump in the calls or puts right away. But this works, fine. I back tested this one, it worked, right?
Wonderful.
But,
yeah.
And during the day, I normally like to watch this, right? And sometimes, let's say if we are scalping with SPY or a Vball, right? That's when I use this one. This one is a Vball. And if you look at it, it tries to touch the Vball, goes up. And these upper and lower deviations. Look at the price move. It's gonna try to touch this one once a time. And if it breaks, it's gonna try to touch the Vball. But this was showing the strength in Tesla when it didn't actually held the level. Instead of going to a lower deviation, bounced back. That's the way I look at it. So I have so many indicators. I've tried so many indicators. It's basically the best one works for you, whatever you feel comfortable.
Yes. Thank you. And then just a couple more questions. In terms of market maker tactics, the way they play games with like OPEX, or even information on flow and things like that. If there's any educational resources or YouTube links that you guys have on your Discord, that'd be super helpful.
For OPEX, you have to understand option expiries is monthly expiries are very low. And there's something called quad witching as well that happens for quad witching, where future options, multiple expire at the same time. And those cause a lot of movement in the market sometimes. Now for this, I'll post some resources because that's something, it's not going to come by me answering right away, but we'll post some resources, I think. To understanding what options expiration is and why does it matter, what happens, why does the market moves. Sometimes we say Vanna is going to show up, like tomorrow is Wednesday, does Vanna show up tomorrow? I'll let you guys know in the pre-market if it comes and what level needs to be held. Why? Because it's going to be backed up by data, right? Sometimes there's so many puts sold, and when so many puts are sold, meaning people buy, when there's panic, the market makers sell that stock. So market makers are now short that position in order to hedge against the puts they sold. And let's say those puts either lose value or they need to come off on the expiry when people are selling. Now that same stock has to be bought back, right? And that's when you see all of a sudden rip on Mondays, Wednesdays before the option expires, and then options go from 10 cents to like $2, right? That's called covering. That does not mean bullish. That's his stock that was sold now is being bought back. All right, and so all these things matter. That I'll explain, with how open interest on Friday and what.
Even with the OPEX and all these things, to be honest with you, most of the things the chart will tell you right away beforehand. The way I look at things, the chart screams, at you, and it's up to you, like, how you read them. Of course, in the OPEX, they have their, like market makers, they're going to make money. They call themselves smart money and us retail traders are the dumb money. And it's for that reason. They will do so many things. That's the way they trade, right? It's us, against like those sophisticated with machines and all kind of, stuff they have. We are just trading from our places, right? So of course they'll try to make money. But once you start reading the charts properly, the charts actually tell you the story up front. That's the way I understood most of the stock. Let me explain you something on something really good on one of the chart, right? Let me give you an example. ATVI. T bought the calls on ATVI. If you look at this daily chart, you'll not find anything, right? Except for a bull flag, and it went up, right? Nobody could have guessed. But then you try to see, as a person, that's how I learned actually. When Ricky put a trade or LB puts a trade, I do not just jump in like blindly following them. Why? Because they have their own reasoning and I have to know their reasoning before I jump in. You know what I mean? So at least I would know, what they're trying to, what price they're expecting, what's their price target. is. And if I
Yes.
feel if it's a good one, why not? Let's make money. And if I feel it's not gonna work, I might tell them like, bro, I mean, this is what I feel. And if they're confident, very good. I mean, it works for them, why not? But I will, sit back. That's the way I look at it. Let me give you an example on 4 hour now. See this? It's clear over here. The price moved and it stayed above the 200. This was the tell that, some big move is coming. Look at this from all the way to 29th of December to 18th of January for almost close to 1 month, right? I mean, 20 days. The price was hugging the 200. It was not breaking down. It was not going up. So this was a tell that a big move is coming. So basically the chart tells you, something is about, that's why, I mean, me and T and LB and Ricky, we were talking in the daytime, even Yash as well. We were expecting some news. Why? Because the way the charts were behaving. So, and right away, the news came up.
Wonderful. And then just 2 more questions. Is a subscription to SpotGamma worth it? Or do you guys, I mean,
See,
Which one?
and for SpotGamma, I mean, if you want it, you can, but we basically post the main stuff. That's all I look at, right?
and it's daily, right? It's not like throughout the day. It's not intraday.
So, if you really want to, like, if you're an advanced trader, you think you're gonna do a lot of things, and like personally, me and T, we pay a few $1,000s like for these services, like because you need them in the market, like like data services, like
Sure.
services and stuff, right? Like we don't have them. Those are algos and whatnot. But SpotGamma is up to you. I mean, if you want to try it out, additionally, once you learn and you think it might help you, and you're a full-time day trader and you're, making profits, then why not? I mean, it's an investment.
Sure.
It's investment into learning. That's
Exactly, Ricky. Best way to put it, bro.
I love SpotGamma personally, right? They have no idea who I am. I don't know them, but I love what they do. I mean, it's up to you guys if you guys want to try that much.
I mean, making money in the market, I mean, there are so many ways. I mean, I read on Reddit, right? I mean, there is something called Theta Gang. They only make money by Theta, right? I mean,
Right.
they sell the calls and puts and they take the Theta, they cover it by the end of the day and they go home happy. So there's so many ways of making money. To be honest, I mean, before I met Ricky, all I knew is like just to buy equity and sell it, and that's it. And of course, I knew about the options. I've studied in my school, but I was taught that options were risky and so much complicated stuff. But then when I joined MSL, I came to know there's something called vertical calls. There's something called bear spreads. There's something called iron contours, butterflies. And who would have imagined butterfly, right? But I'm a proof. I made from Ricky's butterflies, shop butterflies. I made let's say one contract, $800 from 40 cents. 40 cents to $8, and then second one I sold at 16, and third one I sold at 24 from 40 cents. You know what I mean?
Those days will come back in April, May, guys. That's when the market will be ready for those days.
So
thank you so much.
No problem. Anybody has a question?
Anybody else, guys? At 8:05, 8:10 will end. And for this 1 hour went by fast, man. That was good. That was really good. Guys, anyone else wants to share something?
I just wanted to ask you, Ricky, when you're taking strangles, are you looking at the strike prices that have, like, are you paying attention to the IV?
I look at everything. For strangles is not, see, strangles easier said than done. That's one thing that one has to understand. Many times we'll see options go up more than 100%, 200%, but how often does that happen, right? And you have to know when the move happens. Buying strangles, you have to understand the value you're paying for those options has to be fair. And when the stock makes a certain move to a certain direction, that your downside is limited, that your downside is only limited, right? And the move expected, how much are those strangles going to move? The IWM strangles that I do for the weekly expiries is because they move a lot. Right now, I'm in one since Friday. I'm not selling it because I still believe a directional move is a due, right? I might not be bullish, but I might get the $10 move to the upside, right? And those strangles, IWM, I haven't lost a single one. Let's see how this one plays out. And tomorrow, if the market holds up, is bullish, we see 209, 210 on IWM, those same strangles, I'm going to sell for like 50, 60% profits. But strangles, more than pricing, you have to understand the move that it was like for example, if you guys pull up CRM on the daily bucket, the CRM equity triangle we did. So on the daily, yeah. So you guys see before the 3 days, now on April, that green candle above your moving average to the right, Bucky, right?
Right. Okay. This
4
one.
days
This
ago,
one.
yeah, this one right here on 9th February. Now CRM was set really bullish, but me on the overall market, I was kind of not bearish, but I did not know. Like, and I was humble. I'm like, I don't know what the market is going to do, but CRM is so well set up for a $10 move to one side. That's all I knew. That $10 move is going to happen either to the upside or a downside. And the next 3 calls, which I bought for, I think I bought the February 25 strangles. When I looked at the value of those options, they were priced really well. And I got them at a right entry price, and those strangles never went down actually from there. They only went up. Even though CRM was at the same price the next day, I held, and then we finally got our breakdown to the downside. And because the puts move faster, those same strangles almost went up 100%. My entry was $4 something, and they went up to like $9. But my target was above $650, and I got out of my target, and that's it. And then the other strangles which we bought for March for CRM, entry was 9 something, I believe, and those went up to 13, 14, 15 bucks. Right? So strangles, sometimes you just have to look at the fair value of the options that, you know, when the stock makes a move, that one of them will go up more than 100% fast. And then the other, even though it loses value, overall that gets added on to the overall price of the option, which leaves you with net profits. Yeah.
All right, thank you.
But strangles, I'll do a session on strangles. It has to be in more details to answer your questions, to be honest, because, you know, on strangles, it really, like, the price that you pay has to make sense. And which
And the thing is,
choose.
I'm sorry. I mean, but the thing is with the strangles and the like vertical calls and all this thing. I mean, the way I've understood and I've looked at it, I mean, this is a complicated stuff. I mean, it's not complicated. I mean, it requires a certain set of skill set plus the experience. And so this is I would definitely will be doing. I'll be doing in future. And it requires like so much, you know, I mean, knowledge and first-hand knowledge plus skill set plus experience. I mean, the way I look at it, I mean, some people that, you know, I've seen in the group, you know, they just buy strangles, you know. I mean, of course, I mean, if the stock is sideways, it's gonna go up and down. But getting a proper strike price or a proper strangle, it's hard for me. Let's put it this way. That's why anytime, like, if I, you know, I wait for Ricky for the butterflies or, you know, strangles or vertical calls. That's where Ricky's expertise comes in. I just normally simply take calls or puts, you know, take my loss or profit on the side. But this one is a hard stuff, the way I look at it, especially with the butterflies, because it's very tough, you know, I mean, to predict, like, you know, on Friday, where the price is gonna be.
Oh, yeah.
And a quick question on the strangle: how far away from at the money do you determine the prices for the call and the put?
It depends. Right now I have a long strangle in Uber. Bucky, if you just look at the Uber daily chart. Now I got these strangles before the earnings, right? I decreased my position after the earnings move, because after earnings we did not get the move. We had the gap up, but we didn't really get the move that I was looking for, a $3-4 plus move to one side and hold, where we would have taken our profits. So Uber here, if you just zoom out a little bit, Bucky, or maybe go on the weekly. So I have the May. So I bought the May $30 puts and then 47.50 calls for May. And I think Uber is a due for at least a $15 move to either side. To the downside, it might be limited towards 23, 25 if we break the $33 level. To the upside, I think we can even hit 48 bucks in the next 1-2 months if it really goes. But that strangle requires patience. Right now it's trading between 250 and 310. It fluctuates every day because it's in a zone. But once Uber breaks $33 level to the downside, which I'm going to give it a few days, if it breaks, I don't know if it's going to break. If it breaks, those strangles are going to go to 450 real fast, because puts will more than double right away once it breaks, and the market should be weak by then, I guess, if market drops. However, if Uber goes above 40 and holds, it's likely going to go towards 43, 44, 45, and then those 47.50s will be up enough for me to get out at profits or whatever money I can get out of them, right? But these require patience. So those I bought for May, I'm not even looking at Uber, to be honest. I don't even look at it on daily basis. I just look at it weekly. I want to see on Friday where it closes to manage my puts. right?
Even the same thing with the PLTR as well. I'm gonna pull PLTR. I mean,
But
you
those
did the trade, right?
Palantir options, the strangles went up over 100%, by the way. Who would have
It
guessed
was
Palantir was going to come to 13 bucks, right? Who would have
something around here, right? Something
Yeah, so if
around
you pull
here.
up weekly chart on Palantir, one weekly when I entered, and you guys
These
see
three candles.
that bear flag. So after the, if you go on, yep, the red candle right here, right, the one before that, yeah, this zone, before that breakdown, the fourth candle, this one, yeah. So 27th December, if you guys go in premium, right, that's when we entered PLTR. Brainy, you bought these with me. I was simply, most people in the market were going long PLTR here on support. I was like, hell no, this is a bear flag possible. And given the market sentiment and things that were happening in the market, I mean, this can flush also, right? And so we bought our strangles, and those strangles, our entry was $1.28, $1.29, I believe. I started scaling out at $1.50, $1.60. I sold out, and but those strangles ended up hitting $2.30, right? We had the $15 puts, I believe, and then the $21 or $22 calls. And to the downside, those strangles more than doubled, and we still had time. They were for March.
They were March, yeah. I mean, actually, Google looks nice.
They should still be up 100% here, I think. So the
Google looks nice on
this other chart, roast, ROST, go on daily, ROST, weekly.
ROST?
Yeah, roast, go on the weekly. So you guys see this right now is due for a $10 move to the up, one side or the other. As soon as that $10 move happens, either to the downside or upside, or let's say $15 move, if you pick the right strangle with the right pricing, they're probably going to go up 70, 75%. And if it does not go up, let's say it just stays sideways, at least your strangles don't lose value. You might be down 10, 20%, right? But you get it with some massive profits. And on this name, strangles will actually go up by a lot once it makes a big move. The only question is holding through the turbulence and holding through that uptrend or downtrend. That's it, like letting it ride, for example. And
so yeah, I mean, going forward.
G-Money for roast, I did not do a strangle because that's exactly what I mean. The option pricing has to be fair and right for me to buy it. The roast, I'm looking at it, I'm tracking it. I'm gonna give it another week or two. If I get 96 again after a week or two, I will throw the strangle in the group. The option value has to be fair in order for me to play that strangle, right? Certain calculations will have to be so that I pay the right premium.
Wonderful. So you factor in the Greeks too, then, right, when you're about to execute it?
Absolutely.
Got it.
Absolutely. Apple is my next candidate for a strangle. Go on the Apple weekly, Bukky. Because in case if the market does break down, if it breaks down, Apple has a $10 move to one side. Look at that.
Sorry for the levels. I mean, so many of them.
Well, that's fine. This is perfect. Apple right now, if you guys see, for the last 2 months, has been stuck to 170.
2 months. These are 2 months. Yeah.
And these two candles that has been basing is due for a move. $10 upside or downside. And Apple, those triangle will go up by 300-400% easily. But I'm gonna wait until the right moment.
I mean, for an Apple, I mean, I had the trade based on hourly, right? I mean, where I was sitting over here, and I drew these lines like before the market open. I mean, this was a simple one, right? It broke. Now it's retesting, and let's see if it's gonna take it out. And once it takes out 176, that's where I'm gonna actually take some calls and probably go heavy. And once it takes 166, 167 down, that's where I'm gonna take the puts, and I'll be heavy on those. Right now,
Bukky, sorry, I stopped you. My bad. Go ahead, finish.
No. I was gonna say, like, so basically, I mean, the reason for these levels, look at the price movement in between 172. They were trying to hold this level around here, and the 167, 166. It's another level. Look, I mean, that's the way I look at the price. So basically, I was telling you, Ricky, as well. I mean, if the market turns bullish, bro, after 177, we can go heavy, or below 166, we can go heavy in puts.
Yeah. See, in this market, I'm just scared of the super bullish setup. They scare me, to be honest, just based on macro factors. But we'll see. And if you pull up Tesla on the daily, so this Tesla also, if we find a decent strangle, like 2 months out, 100 points each away, like priced at $15, those strangles will probably hit 40-50 bucks. And I'm probably going to do one and hold through it. A one side move, or like a 70-80 point move to one side on Tesla is pending, is going to happen very soon. And Oscar, you have any question, or you're good?
Oh, hey, what's up, guys? Just joined in about 5 minutes ago. I was busy working. Not sure if it's been asked or not, but so I draw the lines as well and everything. And things, we're looking at so many charts all day that when I go back to that chart, maybe I've already missed my entry. And I've drawn on the chart. Oh, this is when I want to enter or whatever. Do you often use just a bunch of alarms in your charts just to remind you to go back to it once it hits that certain level? Little things like that in my process is what it's making me,
Look at this.
It's flawed.
To answer your question, Oscar, look at these levels on the screen. These alerts on the screen. These are all active. And some of them, these are active on Lululemon as well. I don't have it open, but I have it, alert set. And once it's gonna, give me an alert, then I'll open up the chart. There's so many of them. I just put them, I keep them aside. Let's say Lucid. Once it's crossed $43, that will be a bullish sign, right? And Lucid. Until then, I'm not gonna open Lucid chart. It was same with the EDU as well, or Bukky. So there's so many alerts set over here. When they actually give me the alert, that's when I actually open the chart and see what's going on.
And Oscar, your question has actually been answered in a lot of details also by Bukky and Yash in the session earlier. So I'm going to post the recording. You must watch it based on your question.
Yeah, thanks. Cool stuff. Yeah, but what I have an issue with my trading experience is the process. My process is not there. I'm seeing things a little, obviously a lot clearer than a year ago, but my process is flawed. And so it's really cool to see Bukky and also Yash to see their process. You know what I'm saying? And then pick up little things that I'm flawed in, because I know there's holes and there's things that you could always get better at.
No, it's absolutely right. You're right. As per, everybody is learning, right? We learn from Ricky, LB, T, Yash, Turkey, everybody is a different trader. So we try to, see what's their mentality behind the trade is. Normally the way I look at the trades, I draw the levels and then I just follow them. And sometimes, I take a loss, sometimes I take a profit. So it's for everyone. Everyone is learning, right? Every day is a learning.
When do you get rid of these levels? I do the levels, the overnight levels. I had a chart that I was looking at one day. The Airbnb, I fell in love with it. I thought it was good. And then by 2 months later, I have, so many lines in it that it almost looks just like.
And look at this. On every chart, you sit down and you see where the supports and resistance are, and you make levels. Everybody has different levels, right? What they're comfortable. Look at Amazon. Sometimes I get confused, why there are so many levels over here, right? But when I open let's say 5-minute chart or on this one, right? When the price was behind, look at this on 5-minute. It's getting rejected from 31.70, and this is an old level. And during the earnings, it got rejected from the upper level. So that gives us an better understanding.
Gotcha. Yeah.
Yeah.
Okay. Yeah, cool. Thanks, Bukky. Thanks, Ricky.
You're welcome.
Bukky, I just want to say, man, I'm damn impressed by you. This is good. And guys, I think we'll do this more often as a team. I think there's a lot to learn from each other here. And, you guys are sharing a lot of valuable information. Next time, hopefully we have more participants. I know Yash and Bukky are absolutely killing it because they're also on the voice chat. So this is really amazing. G Money, thank you. Oscar, thank you. Zoom user, I don't know, RD, I think, thank you. Rest of you guys also, please do join on the voice chat. This will help you build up your confidence. God bless. Thank you so much. Have a great night. Tomorrow morning, pre-market, let's start strong. And it's Wednesday expiry. So let's see if we have some banner tomorrow. Have a great night, guys.
Thank you, Ricky.
Thank you, everyone.
Thank you.
Thank you, Bukky.